Dylan, I am beginning to think more and more that we should actually take a step back when we discuss Trump and look at what he is doing broadly rather than trying to focus on what the man does day to day, because he comes in one day saying something else and he moves on the next day and he talks about something else. From your perspective, here we are. He is meeting with the head of the European Trade Commission, Jean-Claude Juncker, today in Washington. And as he is preparing to meet the guy, he says tariffs are great. How to read the man?
No, I mean, on a day-to-day basis, it's very difficult. And as you clearly pointed out, it's better to take a step back and try and see what he's trying to achieve. So he's got a lot of method in terms of what he's looking at and what he's trying to achieve from a position where tariffs have been generally in the rest of the world's favor against the US. He's trying to turn that around to be able to allow the US to grow again at rates that hopefully they haven't seen before. So looking back at the policies and that he's trying to implement, luckily on the last sort of trade discussion and negotiation, he's gone and said we're going to implement 500 billion rands worth, or dollars worth of tariffs on China. So China hasn't responded immediately to this. They have said that there is a bit of manipulation. Well, Donald Trump's saying there's a bit of manipulation. But from an overall policy perspective, the good thing here is that he hasn't gone and set a date on it.
Right.
So he's still open for discussion, which shows a very good sign of it.
It's almost like saber rattling, isn't it?
Yeah, I mean, he's basically just trying to negotiate. It's a hard negotiation tactics that he's using. I mean, we've seen this. He's been doing it for the last year and a half, 2 years he's been in office. So we can expect it. Unfortunately, what this does is cause a lot of uncertainty in terms of the markets.
Yeah.
And generally, global trade and global growth. I mean, these questions are being asked now basically because of these tariffs. So, I mean, when we're having a BRICS summit here in South Africa, we also need to be concerned. And obviously, as developing nations, we need to obviously gain as much sort of strength as we can to fight against these policies, because any implementation on these policies or anything is going to indirectly flow into emerging markets like ourselves.
Yeah. Negatively or positively from how you are seeing the markets reacting to this, and perhaps if you can add in your judgment call on how the markets ought to be responding given what you've just said and what we're seeing.
Well, I mean, obviously from a normal perspective, the increase in tariff is going to basically be a cost addition to the consumer.
Right.
So it's not great for our pockets.
Just explain that for the benefit of people who are not understanding, because people tend to think we're talking high above the minute. What we're actually talking about are things that affect the daily things that they buy and sell.
So normal consumer goods, I mean, our general sort of shopping basket of goods will generally be affected through a lot of this discussion, but that's more around OPEC and their discussions and in keeping the prices higher. From an inflation perspective, and from basically our purchasing ability as a consumer, that's being affected. So the inflation behind that and the ability for it actually to move up higher going forward is becoming more and more intense.
Because of that additional cost.
Because of the additional cost that they're implementing around the globe. This will unfortunately, as we stand in the current environment, it won't contribute to growth over the globe.
Yeah.
So we can't see growth coming through, and we're seeing a lower growth coming through and higher inflation over the next 6 to 12 months.
Yeah.
Unfortunately, this hurts us in our direct pocket. So it makes everything more expensive and doesn't allow us to retain or grow our earnings.
Some people have suggested that perhaps what he is doing may eventually lead to halting global growth. Would you take such a strong view?
I wouldn't say halting. It's certainly slow it down. Halting, yes. I mean, we obviously go through a general cycle in economics, and it's basically our ups and downs. But what we are seeing, the rate of change of growth from a Chinese perspective, the Chinese have hit their peak in terms of growth.
Yeah.
They are currently slowing, but it's not halting. I mean, global growth is going to not halt. It's basically going to, it will continue.
Yeah.
At the tariffs and the costs that hold, there will have to be agreements put in place to actually manage it. But I don't think a halt is possible.
Okay, so a better word would be hurting global growth.
Yes, certainly.
Let's talk U.S. earnings season. Obviously, the U.S. economy has been enjoying Donald Trump and the policies that he has brought through.
Yeah, most certainly. And we see, I mean, especially the tax incentive that's starting to flow through to the companies now. It's a 6-month performance on tax, and they're getting that reduction on their balance sheet.
Yeah.
But what the market is focusing on is sort of sales growth, continued growth in terms of earnings, and also cash at the moment. Because we're in an environment now where cash is almost becoming king because of the risks inherent going forward. Based on global trade, based on a lot of other factors, we've had a very good equity run. So basically the costs at the moment from that perspective are just becoming, from an earnings perspective,
Yeah.
are just becoming a lot higher.
Yeah.
And we are seeing good earnings, but mainly out of the information technology sector. The other sectors like financials and banks also doing relatively well.
Right.
But it's the other sectors that are struggling to actually post good earnings for this season.